All right, Ken Orange Theory Trader back with you with another video talking about how to build weekly bias and to form it to get those massive 100 to 200 pip moves a week. So let's get into it. First off, we need to define terms and what you're going to be looking for. So when you look at the daily chart, okay, from the prior week, you're going to be looking for two type of weekly structures, one of two. Okay, you're either looking for what's called a classic expansion week or a straight rise or drop, same difference, where the price just goes pretty much straight up all week or straight down all week. Or the next thing you're going to be looking for is a midweek reversal, okay, where price reverses on Wednesday. So I'll get into that. So I'll show you these pictures of that. So just bear with me. So first off, this is a classic expansion week. And is it going to look exactly like this the whole time? No, this is just a general framework. Okay, general framework. But there are some non-negotiables that you're going to be looking for. The first thing you're going to be looking for, let's explain what we're looking at here, is the for a bullish example, we look for price to open. This is the weekly chart. This is a 1 week. This candle represents 1 week, this big green one. These smaller candles represent each day. So we look for price to open and go down like it does here on Monday. Tuesday for price to raid below Monday's low and then close above it, and then continue long for the rest of the week, except for Friday where we expect some consolidation for the most part. These 5 days make up this one candle. Okay, so we're looking for something similar to this. But the key thing I want you to look at is the high and low of the week must be on Monday or Tuesday. Or for a uh, bearish example, the high or low of the high of the week must be on Monday or Tuesday. This right here, price starts the week up and then tanks. This is a classic expansion week. All right. So that's just step one. That's what you're looking for last week. So if it's the weekend, Saturday, Sunday, you're looking for this type of price action, all right, to take place. Now, remember the important points. If the high of the week is not on Monday or Tuesday, and, okay, the most important part, it needs to end near the weekly high or low. So let me explain this one more time. Price needs to start. Hopefully you can see my mouse. It needs to start down here and end close to the high up here. Okay, it needs to start up here and end close to the low down here. It should not be ending near the middle of the week. If it does that, that's not valid. Okay, where it starts and where it ends is very important. I cannot stress that enough. You have to have both. All right. Now, next up, let's talk about the midweek reversal. This one's a little easier to see, but it happens less often. Okay, it happens less often. I have to say that. So all we see is this. This is once again the weekly candle, a bullish example where price opens, it goes down for a couple of days, typically Monday, Tuesday. Okay, the low of the week is on Wednesday and Wednesday only for a bullish example, and that is it. So it's very easy to see. And then price springs up for the rest of the week for Wednesday, Thursday, Friday. Okay, that's the general idea. Same for a short example. Price goes up for a little bit, and then on Wednesday and Wednesday alone, it creates the high of the week and then tanks. All right. So that's easier to see, but it's less common. All right. So the non-negotiables are this is that the prior week low or prior week high must be on a Wednesday and it must hold. Okay, because price won't always end so perfectly above, at this high here or at this low down here. It doesn't always happen. Sometimes price continues through the next week. But my point is this is that when you see a midweek reversal, we're going to treat that as a trend reversal, and we're looking for a continuation for price to go in the same direction. Okay, and I'll show you this. So just let's take a look. So here's how you form the bias. If you're coming to the chart on a Friday, the market is closed. This is primarily for forex traders, but anybody can use it. Okay, crypto may be a little different though because it's Monday through Sunday. But at the end of the day, the classic expansion week has to be last week, and then going into next week, we just reverse it. You're looking for a reversal at the end of the day. I can't put it any simpler than that. But in terms of the structure, we're expecting for Monday or Tuesday to make the lower high of the week next week. Okay, so to put this simply, and I'll show you this. So to put it simply, if you see this last week, you're expecting this next week. If you see this last week, if you see a bearish expansion week, you expect for price to reverse on Monday or Tuesday of next week and go up. So basically, they're just going to erase each other. This takes care of this, okay, or this wipes out everything that happened here. And I'll show you this. So just give me a second. Now, for the midweek reversal, however, We're looking for a continuation either on Tuesday or Wednesday. If it doesn't play out by Tuesday or Wednesday, then you have no trade. So what do I mean by that? If you see this last week, so let's just stick to the left side of the chart here. If you see this last week, this bullish example where the low of the week was Wednesday and it expanded up, then I'm looking for this the next week. Same direction, where Monday or Tuesday is typically Tuesday is going to make the low of the week. Sometimes Wednesday it may make the low of the week, and then it's just going to continue in the same direction. And the same for the other way. If I see this last week, midweek reversal, Wednesday makes the high of the week and tanks, then the following week I'm expecting something like this, where probably Monday or Tuesday makes the high of the week and just continues on. Could be as late as Wednesday, but Wednesday is the cutoff. All right. And again, I'll show you this. So let's keep going. But lastly, though, if the prior week high or low, when you're looking at last week's price action, if the prior week high or low is on Thursday or Friday, or there's just no clear structure, if it doesn't fit into one of the categories that I just explained to you, because there's only two that you're looking for, skip that pair for the week. Don't bother trading it. All right. So let's go. So I'm going to drill. I'm going to give you some drills now. Okay. So what is this? This is a daily chart on the Canadian dollar yen, or CJ for short. And I'm going to walk you through this in case it's kind of small. The high of the week is on Monday. The low of the week is on Thursday. And price ended down here. This is Monday through Friday. What is this? Is it a classic expansion or is it a midweek reversal? 5 seconds. Okay, this is a classic expansion to the downside because the high of the week is on Monday and it expanded all the way down and closed pretty close to the low of the week. The low of the week is on Thursday, but it closed close enough as to where we believe there may be a long example next week. All right. Okay, so that's that. This is a classic expansion. So what's our bias next week? Long. We want to see price go back up. Okay, what's this? We have our low of the week on Tuesday and our high of the week on Friday. What is this? 5 seconds. Or pause the video, think about it. Okay, this is a classic expansion week bullish because the low of the week is on Tuesday and it ended close to the high of the week on Friday. All right, so just one direction. That's all you're looking for. But it has to be Monday or Tuesday has to be the low of the week and just expand straight up. Strong close to the upside. Okay, so for next week, our bias is short. What's this? We have our high of the week on Monday, our low of the week on Thursday, and price closed right here. 5 seconds. Okay, this was a trick one. All right, and I threw that in there because you're going to see this. This is nothing. This is nothing that I've explained to you. It doesn't matter that the high of the week is up here. This was just pretty much consolidation. Price opened right here. Price opened right here and closed right here. So did it even move in any one set direction? No. It went down a little bit, went up a little bit, and pretty much closed right where it started. This is a no trade for next week. There was no clear direction to me. It pretty much was a consolidation. It didn't move much at all for the whole week. So if you turn this into a weekly chart, if I compressed all these 5 candles into one, it'll be a doji with a wick up here and a wick down here. So no real movement. Price didn't move this week. We're not interested in that. We're looking for this. Strong moves. We're looking for this. Strong moves, not this with consolidation. If price ends where it started, that is a no trade. Okay, that is a no trade. All right, so lastly, what's this? Low of the week is on Monday. High of the week is on Friday. 5 seconds. Classic expansion or midweek reversal. Okay, this is a classic expansion to the bullish side. So our bias for next week is bearish. We want to see price go down. All right, we want to see price go down. So before we put it all together, remember that just because you have a bias doesn't mean it's going to play out. Do not force a trade. Don't see something like this and think, okay, well, price is guaranteed to go down next week because it's been rising for so much. No, it is not. And I'll prove it to you right now. This is the same chart. Okay, let's go back and put it. See, this is Australia, New Zealand. This is Australia, New Zealand. This is the next week. Look at this. Monday, Tuesday, Wednesday, Thursday, Friday. Yes, price did retrace some, but then it went right back up. Okay, anyone who went short here only got a little bit of profit right here for how we trade with the counter range theory. But did this range even complete? No, it went right back up. Okay. So bias is just what we think is going to happen, not is what is guaranteed to happen. All right. So let's take a look at some successful trades on that because obviously, while nothing is 100%, if you manage risk, you can manage to get some good wins. So let's get to those 100 to 200 pip drops I'm talking about here. So last week, let's go slow here. Last week, this is last week. I put a little black line here to delineate between the weeks. This is Monday of last week, Tuesday of last week, Wednesday, Thursday. This red candle here is Friday. This is a bullish classic expansion. So remember, now we're looking for a bearish classic expansion in the other direction the next week. So where's our entry? How do we get into this? Okay, so candle range theory comes into play right here. Last Thursday was the range candle, this candle right here. We use the high of that candle as our entry zone. Monday, price open for the week, went slightly above this range candle, closed inside of it. Our entry was right here. Very thin window, but there it is. It's above the weekly open, which is good, and above the daily open, which is also good. And this high of last week held. And then look at the rest of the week. You had no stress, no drawdown. Well, a little bit of drawdown on Tuesday, but after that, price just tanked. Okay. This was a 170 pip drop. So it is okay on Monday to use Thursday as the range candle. It can happen. Sometimes it's rare, but it can happen. So I wanted to include this example. But remember, the key thing was that price closed close enough to the prior week high, and Friday poked it. So Friday trapped all the long holders here. And anybody who went long here on Friday got destroyed for the rest of the week. That's it. That's all you're looking for. Strong move to the upside, strong move to the downside. Let's go to another example here. So this is pound New Zealand. This is a classic expansion on Monday. So where's our prior week low? Right here. It's on Monday, Tuesday, Wednesday, Thursday. Friday is right here. It closed close to the prior week high. Okay, both of those are non-negotiable. So what's my bias for next week? It is bearish. Okay. Now notice this one didn't drop as much as this one did, but it still dropped. But our trade here would have been Tuesday. So this was Monday. This big green candle here was Monday. And then Tuesday, price went up above Monday's high, swept the high, closed beneath it. As soon as it closes beneath Monday's high, that's where we get in. Okay. And the best exit would have been on Wednesday because Wednesday did come back up and then just consolidated for the rest of the week. So we're not expecting a whole complete trend reversal here. We're just grabbing a piece of this retracement. So this one candle here, though, well, these two candles together before it started retracing would have given you 200 pips, a 200 pip drop as promised, as the pound New Zealand is a pretty high ADR pair. But don't get into this trying to get 500 pips a week. That's not what I'm teaching here. Anything from 100 to 200 pips is decent. And if you scale in just one of these trades a week, I promise, with enough margin and a big enough account, you can pay your bills with this. Okay. So let's go to the next one. So once again, though, this week sets up this week. It only gave one good move, but that's all you need. So next week, here we go. This is a midweek reversal. Now, this is the first midweek reversal that we've covered. And I want to be sure to take my time with this because you have to remember that if you see a midweek reversal last week, we're going to look for a continuation next week. So we're looking for two long trades here. This is last week is Monday, Tuesday, Wednesday made the low of the week right here. Okay, closed all the way up here and then boom, took off Thursday and Friday. So we didn't trade this. So now we're looking to see, okay, where can we get in for next week? So this is Monday, Tuesday, and our midweek reversal comes right here where Tuesday, and this is a long wick. This is kind of an anomaly, but it does happen. It spins all the way down here and then comes back up. Not the easiest trade to get into. However, where's our signal to get in? When price starts to close above the low of Tuesday. This is basically two midweek reversals back to back. Okay. When it starts to close up here with momentum, that's when you take it and you get in. As long as you're in below the weekly open and below the daily open of the day you're trading, that's ideal. And you just get in and boom, price rocketed to the upside. So this was on Wednesday. So Wednesday was the trading day here and price went up 150 pips before coming back down. So again, it's not perfect, but it does give you a general framework where you're just looking for a continuation for about 100 to 200 pips, roughly. This one here would have been about 150 because once it started to get above the weekly open, I'm not looking to trade. If I'm long, I'm not trading above the weekly open. If anything, you're trying to get out, all right? Because this momentum just didn't go all the way back up. It just didn't. You can't predict where price is going to go. So take what you can get. All right. So now let's take a look at this one. Last week, let's start with last week. Where's the prior week high? It's right here on Tuesday. This is Monday, Tuesday, Wednesday, Thursday, Friday. Friday gave a perfect close right at the prior week low. Anytime you see this, this is golden. This is good. The odds are good here because it pretty much did a straight drop. So next week, I'm just bullish. So where's my entry for Monday? This is Monday. Price did a classic expansion and started the week. It went down. It rated everybody who went short. It trapped you into thinking the price was going to continue. And then boom, everybody who went short here to start the week on Monday got destroyed. So our entry is right here, right at the weekly open, above the daily open. Anywhere you can get in right here is fine. So you use that as a benchmark. Your zone is around the weekly and daily open. Below it, when you're long, to the best of your ability. But price does need to close above the prior day's low in this case for you to get in. There's your entry right in there. Okay. That's the entry. And then it rose for the next 5 days. Okay. So if you scale in, even though price, this was a lower ADR pair, this is Euro Pound. Euro Pound doesn't move a ton of pips a week. So while in this case it did move 90 pips to the upside, you could have got in 4 positions for that and got enough of a move to make a financial difference in your account. Okay. But you cannot predict the price. Sometimes price is going to go right back up to where it started. Other times it won't. See, this long was excellent, but see how this long came right back down. That's going to happen. So you have to use your stop losses. Don't be greedy. Take what you can get for the week. 1 to 2 of these types of trade a week, you're good. That's between 200 and 400 pips a week. If you can't make that work, I don't know what to tell you. Okay. So in conclusion, you just use the bias for last week for this week. Use last week to conform a bias for this week. The structure should be easy to see. I only taught you 2 of them. That's all you're looking for. The structure should be easy to spot, and if it's not, just skip it. All you have to do is ask what is the day of the prior low or high of the week, and then where did price close? It's the only 2 options that you have to ask yourself. The main trading days for using this method are going to be Monday, Tuesday, and Wednesday. That's it. Thursday and Friday are going to be your paydays. Those aren't your trading days. Okay, because the entry, if price is going to pay out the way we expect, it's already done. So Thursday and Friday is just continuation. That's it. If your move doesn't play out by Wednesday, scratch the pair and it's done. Okay, using this method. All entries should be below the daily or weekly open if you're long. And if you're short, it should be above the daily open or above the weekly open for shorts. All right. And your risk management is still going to be number 1. So it's not the method that you use. I just believe anything that worked, nothing doesn't. But how you manage your risk, that's what's going to separate you from the folks that have to constantly put deposits in and have to refill their accounts and things of that nature. Still master your risk management. Start small and build up from there. So I appreciate you watching. Remember those questions that you have to ask yourself in order to see what structure you spot on a weekly basis. And I promise you'll be fine. But if you have any questions on it, just leave any comments that may be relevant to the video. And check out the last 2 videos that go deeper into this method of classic expansion and midweek reversals to help spot those in real time. I appreciate you watching. Thank you for your attention. Have a great rest of your day.